Hello and welcome, because this is another episode of me sticking my nose into the charts every single day until I discover a trade model that makes me millions and millions of dollars. And recently, these conditions have really revealed my inexperience. So I started demo trading ICT literally just last Tuesday, and fast forward to the following Monday, and let's look at the stats. Just get a quick update on these statistics, okay? Let me pull up my little database. Let's see. Okay. So I made a new filter that starts when I started demo trading, which was last Tuesday. You can see my first observation here, and you can see that I have had one correct trade. So, yeah, my inexperience really shows. And I took that first trade right at the bat, and it played out exactly as I anticipated. And I thought, you know what? Man, I got this figured out. I finally found my model. Man, I know exactly what I'm looking for. I'm patient. I know when to pull the trigger. Man, this is gonna be great. I'm gonna get funded soon. No, I'm just kidding. I wasn't really thinking that. But obviously, this has turned out to be a lot harder than I thought it was going to be. Of course, because that's how it always is. You always get your ass handed to, no matter what. So, what do I do now? Well, I have to go back and study where am I going wrong? And really, I should have a 50% win rate, but I tend to put my target a lot farther than it has to be. Because right now, when you first start demo trading, you should simply aim for low threshold objectives. So you should literally just be going for the first initial short term low that you see. If you're short, going for 20 to 30 handles, maybe 40, 50 handles, somewhere within that range, that's good. Because the whole point of initially demo trading is to just desensitize yourself to the outcome and feel what it feels like to get it wrong. You just want to get in there, push that button, get uncomfortable, learn about yourself, feel how you feel in these situations in a live trading environment, even though it's not real money. That's the whole point of this exercise, is to desensitize yourself. And I can proudly say that I am getting desensitized to the outcome, because you can tell how many trades have I taken. The count function on here. I've taken 9 and I've gotten 1 correct. Okay. So it's been a difficult, bit of a rough start, but that's fine. I'm getting desensitized to the outcome, and I have the ability to go back and study all these observations that I got incorrect and find out where I went wrong. So it requires a mindset shift on how you think about your losses. And recently, I've reached a whole new point of maturity in my trading where I don't view my losses as setbacks. In fact, I view them as an opportunity to push myself forward, because if you go back and extract the lesson that you learned from the losses, well, then you become better because of it. And if I go back and read the losses that I learned today, and I'm sure y'all probably struggle today as well. I'm going to pull up my Discord. So I recently started a Discord community. It's called Vision Traders. If you're interested, please reach out to me on Instagram and I will invite you. I want to keep it private and small. But, anyways, I learned a lot, right? So the conditions were absolutely terrible. You can pull that up real quick, right? Look at the entire New York morning session. Okay, so if you're a new trader like me, I just started trading ICT, you're inexperienced, then I believe that you might have had a pretty rough session as well. So if I throw my executions on the chart, let's see, executions. Okay, there we go. Got it wrong here, got it wrong here, and got it wrong here. Now this was actually a good setup. It just didn't play out to where I thought it was going to because of the conditions, which brings me to my lessons. So I'm going to read these lessons, and then I'm going to go back through, walk through my executions, and explain how I learned that. Okay. So, as you all know, today's conditions were not it. So, here's how I learned about approaching high resistance liquidity conditions. First, I need to take profits fast. High resistance liquidity conditions means price is having a hard time going anywhere. This means if I trade it, it has to be a surgical strike. I need to be in and out, and I cannot overstay my welcome. I can't expect a directional move because price is struggling to go anywhere. Second, getting entries. I do not want to execute low threshold entries in these conditions because I can anticipate coloring outside the lines, meaning I do not expect precision around PD arrays in these conditions, so I'm not aiming to enter at the low end of a bearish fair value gap, for example. I can actually allow price to trade to the extreme of the PD array and get an entry there, or even enter on a mohawk when it colors outside the lines. And this is what I learned. So I made a channel dedicated to lessons. We can just share that. We can grow with each other. Okay, perfect. Cool. If you're interested, let me know. I'll get you in. But I'm not having this Discord open to the public because I don't want anybody joining. I just want a community of like-minded traders. But anyways, let me put some logic behind this, okay? So on the 15-minute time frame, here I was anticipating a turning point in the market because let's study what we were doing approaching this pool of primary buy-side liquidity. So if we look above the marketplace, we can simply see that we keep taking out short-term highs, right? So what is that doing? That is accumulation of short positions. And if we look below the marketplace, what do we have? We have all these lows that are unbothered. They're not disrupted. They're very clean. So what does that tell us? That tells us that there's sell-side liquidity resting below these lows. They're undisturbed. All these lows are not taken. But if we look above the marketplace, the damage is being done. Look how many times we take out a short-term high, right? We take out this high, we take out this high, we take out this high, we take out this high. So you can clearly see that above the marketplace, the damage is being done. It is physically shown in the charts. And below the marketplace, these lows are very smooth and they're not disturbed. So that tells us that there's actual physical orders resting in the marketplace below these lows. And we can even draw a trend line, right? So here's a retail idea present in the charts. We know that retail is looking to get long off of this. And when they do get long, they're going to place their sell stops below these lows. So this is engineering sell side liquidity to all get ran out in one quick, clean move, a low resistance liquidity run, which is what I was looking for. But I did not get that because of the conditions. So I was anticipating a turning point here, seeing all the damage done above each old high, right? Each previous short-term high. And if we go to the hourly time frame, we can see that we have this inefficiency right here that is also paired with the relative equal highs that we see on the 15-minute time frame. So I anticipate that we could poke up into that primary buy-side liquidity pool spotted on the 15-minute time frame, absorb those sell stops, or not those sell stops, those buy stops, trade it into this imbalance, and then I will look for some indication, reading the bodies of the candles, that would indicate price wants to go the other way. So that was an area that I was anticipating a reversal simply because we have this low resistance liquidity below. And we also have, this is what I was thinking. We also have the huge opening range gap from Thursday's session that still has yet to be filled. So that is actually a draw on liquidity in itself. So I was thinking that would act as a big fat magnet to price. Now, obviously, we got nowhere near there because we just boop, 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 barcode sideways, which is fine. I was anticipating a turning point here. This hourly sell side imbalance, buy side inefficiency also aligned with a 15-minute sell side imbalance, buy side inefficiency. And these inefficiencies are resting just above these relative equal highs. So this was a very key turning point for me where I wanted to look for a sell scenario in the market to get short on. So now I'm going to drop down to the lower time frame and explain where I went wrong. So this execution, this was just literally just me impulsively entering short off of this imbalance right here. Okay, so just a simple mistake. Obviously, the market was in a buy program reaching for buy side liquidity because if we look, you can see how price behaves to the internal range liquidity, right? We have this real volume imbalance on the 15-minute time frame, and we can see that inside this 15-minute real volume imbalance, we ran this low. So this low was disturbed, it's made jagged, so now the market will seek buy-side liquidity above the marketplace. And so I was simply fading that, getting short, because the market simply traded into this inefficiency right here. And then I saw this large downrange candle, which inversed this imbalance right here, and I just impulsively sold short, although we had this imbalance resting just below the marketplace. So that was an impulsive trade, as you can tell. I have quite a long way to go, but I am working there steadily day after day, and I will get there. I will arrive. But I mean, it's just a process, you know, day in, day out. You got to do the same things every single day. Journal, learn from it. I mean, I just keep falling on my face, which is honestly what you're supposed to do in the beginning, right? You have to. You have to get it wrong in the beginning, and I'm just getting it all wrong. This is exactly how I started when I was just reading price action. So before I started taking demo trades, I would literally just watch price action. And that's exactly how I started when I was just watching price action. I just fell on my face. Now, all these are, I wouldn't even really consider these right because they're kind of biased because you can say, oh, well, I would have, you know, got short here along here, something like that. But you got to get it wrong in the beginning, and you can clearly see that I'm getting it all wrong, which is perfect. It's absolutely perfect. Okay, I'm not bothered by it at all. I'm not bothered by it at all because I understand that this is essential to the process. Okay, this is a part of it. This is what I have to do in the beginning. I have to get it wrong in the beginning. And once you adopt that mindset, then it's really hard to allow losses to bother you. I mean, I got it wrong 3 times today, and I'm perfectly fine. When I was trading supply and demand, when I was more of a beginner trader, completely inexperienced, when I had a bad trading session, that literally affected my entire day. And you might feel that as well. You might have a bad trading session and you might feel like shit the rest of your day. Well, I mean, you simply can't let that happen, okay? Why would you let that happen? You have to be grateful for the value that these losses provide. And as long as I keep that mindset, I literally cannot be defeated by any losses that I take in the marketplace. So, I mean, I literally have an iron mind, right? And you can do the same if you simply view your losses from this perspective. So, my first trade post 9:30 was we took out this pool here. Now, initially, I wanted to see the market trade up into this area, right? My point of interest where I anticipated a reversal, but it didn't do that. And so here I kind of just impulsively sold short when we rolled through the first presented fair value gap. Now, what I didn't see was how the market traded down into Friday's first presented fair value gap. So this is the first fair value gap that formed after 9:30 on Friday. If I scroll back to that, here's the first fair value gap that formed on Friday after 9:30. Here's 9:30. Here's the fair value gap, okay? So what I didn't see was that the market literally traded to a short-term discount, which is that first presented fair value gap on Friday. And look at the reaction that we have out of it. We can see that we leave a wick down into it, but the body's closed outside of that. What does that indicate? Strength. And then we return back into the first presentation from today, and I sell short on that because we rolled through it here. I was anticipating it to get inverse, and I was going to take it down to this low, these clean lows down here. So the whole time the market's trading up here, I'm thinking down here. Now I wanted to see it engage this area, right? My point of interest where I was anticipating a reversal, but I didn't wait for it to do so. And you can see that we never engaged liquidity on this price run right here. You see how we make a lower high? That's something that I notice. I never take high quality trades that look like this. They never look like this. They never form a short term high. So this is me just impulsively getting short when the market rolled over the first presented for value gap. So that was a big mistake. And also look at the conditions, right? This is not something that I want to be engaged in at all. And this is outside of the macro. So when the market's trading like this, you know, I don't even want to be involved. And if I were to be involved, well, I would be more comfortable with getting involved if it were during an element of time, such as a macro, which leads me to my second trade. But here, it's just sideways, right? It's just back and forth. We roll over first presented for value gap, trades back up into it. I sell short, and it was just impulsive. My stop loss was above the mean threshold of this order block because I knew the market was likely to color out outside the lines. So I didn't place my stop loss above candle 2 of the fair value gap. So this was really just an impulsive trade, and it's not my trade model at all. Not this isn't what I look for. So obviously a mistake made there. Learn from it, of course. But I mean, notice how we form these relative equal highs, right? So this literally just gives the market to retrace against me after this reaction out of Friday's first presented fair value gap, and then go run out the buy side liquidity above those highs. So that is why this did not play out. Now, in the moment, I was so caught up in the fact that the market was rolling over today's first presented fair value gap that I completely ignored this reaction. I didn't even see this reaction literally until I was studying my trade in hindsight. So that's a mistake I made there. I just had to be more focused. Comes up, runs these relative equal highs. Now here, I did not view this as a selling opportunity because in this price leg right here, we never see a change in the state delivery, right? So we'd have to close over this series of up close candles right here. Now that would validate that as a change in the state of delivery, but we never did so. So although we did inverse this bullish fair value gap, I never have a change in the state of delivery. So I'm not viewing this as a sell scenario. So I didn't take that short, which was good, which is perfect. So I avoided a losing trade here because it did not meet the criteria of my entry model. I don't see a change in the state of delivery, which is something that I absolutely have to see. So I don't get a change in state of delivery, which means I don't have a trade, right? So you have to know exactly what you're looking for. And that's something that I'm still working on because, as you can tell, I still need to work on my executions because this is not something that I look for, although I still executed it. So working on that. But we never got the CISD here, so I don't have a trade. Although we are respecting, or not respecting, rejecting that higher time frame point of interest, I never see a change in state delivery, so I can't take a trade. Also, I never see a sell side imbalance, buy side inefficiency. I guess you could say there's one right here, but I mean, look how tiny it is. It's pretty insignificant, although we do literally trade it back up into it and then roll over. If I were to get my entry here, it would only be framed off of one PD array. And in order to get an entry, it has to be framed off of minimum 2 PD arrays. Like, for example, when I show you this execution right here, this is good, right? This is everything that I need to see. I have a high, a low, a higher high, and a lower low. So what is that? A breaker. So this makes this my breaker, right? Here's the most sensitive candle in the breaker. Right there. The lowest down close candle before the turn that makes the stop run. So we run out these relative equal highs right here. We trade up into the higher time frame point of interest. This is that 1 hour sell side imbalance, buy side inefficiency. And look at the work off of consequent encroachment, right? We can't traverse it. We displace into it, immediately displace back into the range, running out these relative equal highs, right? So look at the body close above this wick. What does that indicate? The damage has been done, stops are ran out of the marketplace. And this is all during the macro as well. This is followed by large down close candles. And then I have a change in the state of delivery. So I never saw it here, but I see it here, right? We have this large up close candle. This does the stop run because it lays a body over this wick. If it got over that wick, that indicates that a significant move has taken place because it was able to get over the wick. Runs out all those buy stops. Large down close candles, change in the state delivery, breaker formation. Now I'm selling short inside of the bearish breaker, but which is also inside of a fair value gap right here. I'll make this darker. Can't really see it. There we go. And the order block. So there you go. Now this brings me to my second lesson that I outlined before I started reviewing these trades. The first lesson. I kind of forgot the first lesson. Whoops. Let's see. Oh yeah, take profits fast. Okay, well basically I learned both lessons in this one single trade, right? Because this is a good entry model. This is what I look for. This is my trade model off of a higher time frame point of interest during a macro. So it's got everything. It checks all the boxes. But given the conditions today, there's two ways that I need to approach this. Number one, getting my execution. I don't want to get the lowest threshold entry because if the market is trading like this, we have high resistance liquidity conditions, which means we can anticipate coloring outside of the lines. What is coloring outside of the lines? That's when the market, or that's when price doesn't necessarily respect our PD arrays, right? We don't see precision around PD arrays. So if we look at this inversion fair value gap right here, you see how it goes up through it, like up around it, right? This is all coloring outside the lines. We don't see precision. Like right here, let's say in this area right here, this would be coloring outside the lines. Now, if we ignore this, if we pretend this box right here didn't existed, and this was the reaction that we had to the inversion fair value gap, just ignoring all this, ignore that, right? And pretend that we only got this reaction right here. That would be precision. That's how you would want to see these PD arrays perform, right? But in these conditions, look what we see. I mean, look at today's first presentation, right? We just go up and down, up and through it, coloring outside the lines. Notice how we're just laying bodies across it, like over and over and over, right? That is all coloring outside the lines. So in high resistance liquidity conditions, we anticipate coloring outside the lines. If we anticipate coloring outside the lines, then we don't want to get low threshold entries, meaning I'm not looking for precision today because of the conditions. So I don't want to get short on the low end of the fair value gap. I can actually allow it to trade up into it, anticipating that the market will color outside the lines. And at one point, this was a bold up close candle that traded all the way through this fair value gap, right? So it gave this a mohawk, colored outside the lines, and I could have sold short literally outside the fair value gap, but knowing that it's still going to act as a fair value gap inside of this breaker formation, keep price lower, and then send it down into the relative equal lows down here. So I did get a low threshold entry here, but it wasn't necessary at all because this is a day where I don't expect precision. So I could literally sell short when the market's trading up outside of this fair value gap, knowing that in these conditions, it's conducive to color outside the lines and knowing that this is going to be a mohawk. And I can also sell short up into the order block, right? But I got my entry here. So That's lesson number. That's one of the lessons I learned today. And then for the second lesson, in these conditions, I do not want to overstay my welcome. If I'm taking a trade, it has to be a surgical strike, in and out real quick. Okay. I don't want to be here for a long time before that long time turns into a bad time. I want to be in and out. So this trade at one point was up over 50 handles in my favor. But notice how it came all the way up, returned, retraced all the way back to my entry point, right? And stopped me out for break even because I set my target all the way down to this low right here. So I thought once I saw this, I was like, okay, finally the low resistance liquidity run is going to take place and we're going to do the damage on this trend line right here. Now, obviously that didn't take place. We just took this short-term low and then we slowly retraced higher. Notice how the market was keying off of Friday's first presented for value gap the entire time. Look at that. So the reaction off of Friday's first presented for value gap, Friday's, not today's, Friday's, was the catalyst for the move that stopped me out. So it's crazy how that works, huh? That's why you got to keep these levels on your chart. But in these conditions, I want to be in and out. I don't want to overstay my welcome. I got to be in, out, gone. So in these conditions, I'm aiming for low threshold objectives, and that's it. In, out, done. So those are the two lessons that I learned today. I hope you learned something from it. I hope that you took a losing trade today so that you can learn from it and become better from it as well, right? Because our losses make us better. Okay, until next time, goodbye.